Good morning, everybody. Welcome to the Flow Show. God, we've had so many surprises this week, and we've had more again today. Just what's going on here? Just a Bank of England headline. Just keep an eye on. BOE saying equity valuations appear stretched, most notably for AI firms. It's a bit of a theme. Anyway, a bit of a financial stability report going on there. Right. Anyway. Yeah, lots of surprises going on today. I'm sure we're going to get plenty more. Morning, Kay.
Morning, Ryan. Yeah, morning, everybody. Surprise week it is.
Yeah, it's only Wednesday. We've had a surprise every day. It feels like Christmas. Right, let's get stuck into it. Lots to talk about. Going to start off with some data, and we'll start off with some. Well, it's not good news at all. Moderate to not good news. We had the latest tank and manufacturers report. Coming in at 8 versus 13 prior. Still a positive, but it's lower than previously. Non-manufacturing index stayed unchanged at 27. So that was okay there. What isn't good news is these cash earnings numbers. Now, we've still got positive numbers turning up, but not as high as expected. The big number, though, that real cash earnings, real wages, came in down 1.4% from a prior minus 0.2%, which was a revision from an up 0.5% last month. So it's now 8 months we're seeing negative wages in Japan. That is not good news for the BOJ, and that's particularly not good news for the new PM, who's going to be looking to do something about that. So, on top of everything else going on in Japan, the data, particularly that wage data, not lending itself to being overly hawkish by the BOJ. This Diet session, it keeps getting kicked down the road. It started off it was going to happen on the 15th, then it was rumoured to be the 17th. Now it might be the 20th or later. A lot of this is down to ongoing discussions between the various parties over what they're going to do, joining up coalitions and whatnot. So that's a fluid situation at the moment. We did have some comments from Takaichi's advisors. Seems to have quite a few advisors. One of them said that she could tolerate a hike from the BOJ in January. Our other advisor, Honda, says an October hike would be too soon, pretty much because she hasn't sorted her administration out. But a December hike would be better timed. So this again is a bit of further easing in rhetoric towards the Bank of Japan, where one might have thought there was going to be a bit of a battle over what they did. But it seems she's coming around a bit more, potentially to letting them get on with it and hike when they see fit. Kay, the timeline, that's pretty much where we were thinking anyway over the next few meetings. So, we thought October might get knocked out because of all the political stuff. But are they even going to be bothered what she thinks?
It all depends what their first meeting will be, I guess. She did say that she wanted to be a bit more involved. Was musing in the chat room this morning if Kuroda wouldn't have to send his one suit to the dry cleaners to pick up another stint, but maybe that's not yet on the cards. But yeah, it's difficult for the central bank to start hiking to continue hiking rates when the prime minister is not in the seat yet. That's what the market is firmly trading right now as well in the yen. I don't know. I mean, it's all pointing still at a weaker yen. I've taken my profit just because in less than 24 hours the thing went another 1.5%. But it's there's nothing is pointing to to a stronger yen right now, because if you put the Bank of Japan on hold, if you don't see better wages, as you were pointing out, saying that it's already an eighth month in a row where real wages haven't increased really. I think only 1 month, and that was bonus month, where it happened. Um, yeah, I mean it's not a great picture. It's really not a great picture right now for the Japanese yen, and it's the I was a little surprised that what's his name, Tamaka, the guy from the DPFP. He's
Tamaki, yeah.
he said, yeah, this morning that they had not even talked about potentially going into a coalition. So that may still um, push things back even further. So yeah, in the meantime, the market is probably going to continue to sell yen. I mean, there's zero reason to buy it right now. Looking at her program, looking at those wages, looking at the Bank of Japan being on hold, why would you even buy yen? The only risk to being short yen now is that somebody at the MOF falls out of bed and says like, well, this is enough and puts it back below 150. That is potentially a risk because we know from Kuroda's time that he said that several sessions for with 200 to 300 points rise in the dollar yen were to be excessive. So if we take that print again today, we have done what is it now, 600 pips in 2 sessions, right? 2.5 sessions.
Yeah, pretty much. So it is. Yeah, that's well into excessive territory, and looks like we've not got any signs of stopping. So yeah, I think we're going to be seeing a step up. Probably the likelihood is we'll get a ring around unless the PM decides that she wants to take a different tack and her MOF to take a different tack and come in with a bit of surprise. So yeah, the higher and faster it goes, the greater that risk grows.
Yeah,
I was a bit surprised that the comments on the BOJ from Honda and the other fella didn't hit the yen as hard, because that's one thing the market has been trading. You know, the possibility that what she means for the BOJ in holding off. So that green light, you would have thought, would have given the yen a bit more of a boost. But I think that price action shows what the market is really trading, and that's likely her fiscal dovishness above, what the Bank of Japan might do. Because even if they do hike, they're going to hike 25 pips, and then that'll be it probably for another 6 months.
yeah.
So yeah, maybe just a little bit of an indication what we are actually trading in this one.
Yeah, the thing is, Ryan, we have, and I've been saying it for months actually. I mean, the reason for being long yen would be that the whole situation in Japan improves. First of all, that they get a stable economic growth, then stable growth in real wages, which there is not, and then you add to that Takaichi, who is a fiscal spender. So that's there is no reason to be really long yen. The only thing, as I said, the risk is that MOF says we are not liking this move, because let's be clear, Japan does not want or does not need or does not want a weak yen. This is not Abe, okay? This is not Abe and Kuroda. We are in a different era now. They don't want the yen to weaken to fight deflation. There is no plan for them to weaken the yen. There is no reason, because for as long as they don't restart all the nuclear plants, they are still importers of energy, which is costing them an arm and a leg right now. But it's just the result of the expectations of Takaichi, and then what is really happening with wages, etc. The thing is, if we talk about potential interventions, I would suspect it may have the form, because we know about Trump's interventionist approach, and Besant also talking about the yen when they arrived. It may take the form of kind of at least the Fed and the U.S. Treasury at least will sign off with both hands if Japan intervenes to correct this yen weakness, but. I don't think the Fed will join, but it may happen during the US time zone. That's what I was thinking. Of course, you add another 300 pips in Japan. It may happen in the Japanese time zone, but I've got the feeling that we may, if, and I'm not saying that we are heading into interventions, but if we would get some, it may happen during the US session.
Yeah, well, as we know, they can pull the trigger anytime they like. It hasn't just been the Asia session that we've had intervention. So yeah, as I say, the higher it goes, the greater the risk grows for that. But yeah, I mean, to be fair, they've got a bit of dollar edge to this move as well,
As well.
because we're seeing a bit of dollar strength around some of the other pairs. So yeah, it's a little bit in the mix. But yeah, when you see a 50, 60 pip move out of nothing, that's the sort of shit that they'll be keeping a close eye on over there in Japan. Right. Anyway, moving on to the next surprise, the RBNZ. They decided to pull a 50 pip cut out of the bag, and I really don't get their statement afterwards explaining that, because they said that higher near-term inflation may prove more persistent. Well, a 50 pip cut will add to that. They say the committee remains open to further OCR reductions if needed. Inflation is expected to return to the 2% midpoint in the first half of 2026. Economic activity was weak through mid-2025. They see both upside and downside risks to inflation. They do see domestic price pressures moderating. Their reason for a 50 pip cut was spare capacity and weak GDP. But yeah, there's no pressure with that one, but a bit of a shock. And yeah, a lot of the comments around that statement and whatever, Kay, was about how inflation is up, could go higher, whatever, and then they go and cut 50 pips. It's like pouring petrol on the fire.
That is the side of the inflation. And then I read those lines as well about spare capacity persisting. Lower rates will aid growth recovery. They seem to not to be happy about the GDP over there. It's and we know it because of that inflation. It's always a very difficult call for any of the central banks right now. And then RBNZ resolutely has taken the side of we want growth to come back, even if it's pushing inflation up. Yeah, real rates going potentially into negative territory. That's not going to somewhere. That's not going to help the Kiwi either. It's not going to help their currency unless they can, thanks to this 0.5% cut, spur economic growth. But we know that all of that needs time to filter through into the economy. Do they have the capacity, the local firms, to borrow more, to spend more, to I really don't know. But for the time being, that to me doesn't tell me I want to be long Kiwi.
No, it's not much. It tells us to want to be long Kiwi at the moment.
No.
We'll have a look at those prices in a moment. ANZ, they're one of the first banks out who now expect them to cut again 25 pips in November. Maybe they'll do another surprise and go another 50, who knows. Norges Bank Governor Basher says we don't envisage a large decline in the rate ahead. So they might be taking their foot off the gas pedal, but still looking at cuts nonetheless. More good news out of Germany. Industrial production coming in a whopping minus 4.3% month on month for August. So things still looking pretty shitty over there. They did see a big bit of a jump in car registrations, but registrations are different to sales. French politics, love getting stuck into French politics. So yesterday, two of the other parties, the National Rally, or RN, as whatever they're called, and Le Pen's party declined outgoing PM Le Cornu's invitation to take part in talks, and they pushed their demands to see Parliament dissolved. PM Le Cornu came out after that, saying he sees the possibility of a dissolution of Parliament as becoming more remote. Good luck with that. ECB's Lagarde felt the need to pipe up as well. She says all EU institutions are watching France, and the institutions hope a path can be found for respecting France's international commitments, including on the budget. So the head of the ECB is now apparently getting a little bit antsy over what's going on in France. That situation still at loggerheads. Macron still conspicuous with his absence. No comments out of him at all. The Cornu's got a presser later on today. Kate, I think we're getting to the point. This is going to come to a head. It can't go on like this for too much longer. It's either Macron is going to have to call an election, or I don't know what happens if he doesn't, because it's all coming to a head.
Yeah, absolutely. I think the solutions are getting fewer, and whatever there is proposed on the one side is getting shot down by the other. So yeah, there has to be something happening over there, and I think the Frenchies may get their sharpen their pencils to put a little cross, or put or blacken one of those little dots in the election booths very soon. That's what I think anyway. I mean, there's very little left for Macron to try.
Yeah, he's been clinging on since he lost that stupid election, and I'm surprised he lasted this long. But he's Mr. Busybody.
Well,
I don't know why he's keeping quiet about all this, and he's not coming out. Does that mean there's something going on behind the scenes?
Could be Ryan. That's just a guess. I think Macron was also trying to play that big role in Europe, but it hasn't really worked there either. So I don't know. Maybe he's just quiet and preparing the suitcases to to go on a prolonged holiday.
Yeah, or maybe he's left already and is already in Russia with his mate Putin.
Maybe.
Yeah, gone up one of the oil pipelines that are now empty. Right. Anyway, sticking with the ECB clowns, ECB's Escriva says we wouldn't overemphasise a strong euro as a risk factor. And apparently they're not at the stage of considering an insurance rate cut. Why he would be talking about one of those anyway, I don't know, because they're all still doing their victory laps over getting inflation where they would like it. Bit of data from yesterday, not a lot. We had the Canadian Ivy PMI, whoop-de-doo, a 61.6 for the non-seasonally adjusted number, up from 50, so a nice big boost there, same as the seasonally adjusted number, jumped to 59.8 from a prior 50.1, so a bit of positivity there. And if you're interested, the old US Red Book came in at 5.8 year on year, picked down from last month. The Red Book is a weekly number covering sort of the retail sales sector. Back in the old days, this would be a bit of a bellwether for retail sales, but it's probably the first time I've looked at it in donkey's years. And another smaller data point, the IBD TIP Economic Optimism Index coming in at 48.3, was expected to rise. So that was it from that date in the afternoon. But we did get consumer credit data later on. That came in with a bit of a surprise. 363 million was expected to be up nearly 13 billion. So a big drop in consumer credit. Now, what isn't looking too good about that is that it looks like consumers are getting a bit cautious about borrowing, amongst other things, which obviously puts a bit of caution in about spending. We are soon to go into the holiday months, which are big retail months for the US in particular. Black Friday, Cyber Monday, Thanksgiving, all that shenanigans going on there. And I was reading a note from KPMG. They said amongst all that credit demand that the top 20% of households are now powering consumer spending, and that things are very weak in the bottom 80%. of consumer and credit. So just 20% are holding up the consumer spending that we've been seeing. So that's not good news. And going back to the shutdown, if it continues, we're going to see the impacts coming into the data when we finally get it. So that consumer credit numbers not looking overly great. You want to see a healthy amount of consumer credit. But if people are getting scared and credit dries up, that's going to have an adverse reaction across spending and all sorts. Now, there was one thing, the revolving debt, which is made up of mainly of credit cards and other loans, that fell by 5.5%, but that is a bit of an offset against a big revision to last month of 10.3%. So a little bit washing out there. Anyway, we'll see what those numbers do next month, see if it's a bit of a trend. Fed's Bostic says that turbulence is leading to firms and households being cautious. Fed's Mirren was out and about again. He was speaking for about 10 hours yesterday. He says the first half growth was slower than expected amid all the uncertainty. And if the economy does well, it doesn't have firm implications for monetary policy. It says data dependency makes policy look backwards. And that market reactions provide the Fed with valuable feedback. And the bond market reaction to the Fed supports the push to aggressively lower rates. He says he's optimistic the Fed will have the needed data by the October FOMC because private data doesn't fill the gap. And says a bit of a line against Trump, perhaps. He says insulation of monetary policy from politics is critical. Fed's cash and carry says it's too early to know if inflation will be sticky from tariffs. He's unconvinced a few rate cuts will translate to lower mortgage rates. He says he would expect the economy to have a burst of high inflation if the Fed drastically cuts rates, just like what the RBNZ have done. Anyway, JPM CEO Jamie Dimon says consumers are okay now, but a recession could happen next year. On to trade stuff. Trump has had Mr. Carney over for tea and cake, and they were speaking about trade deals in the USMCA. Trump says they can renegotiate it or do different deals, and we might make better deals for individual nations. Says the Canada trade deal will be comprehensive. So an early round of talks, not yielding anything of note just yet, but we're in that window now where the USMCA is probably going to hit the headlines a bit more. The EU are getting a bit worried, according to Bloomies. The EU sees the new US trade demands as hollowing out the prior deal struck by Trump. They're concerned that the latest US moves could weaken the 15% tariff ceiling that they got secured in that final deal, unlike the EU to start panicking over something that's nothing. Shutdown stuff. Trump is still wielding the sacking stick over all these furloughed workers. He's been speaking to the OMB chief Vault again, saying that they're getting ready to cut things. You may recall, coming into this week, he said last week he said we would hear about those cut numbers within a couple of days. Well, now it's going to be in another 4 to 5 days when he will tell us about those jobs to be eliminated. So it is pretty much a bargaining chip at the moment. Just in other news that, and just some of the impacts that we can watch out for from this shutdown, a few headlines coming across. There's a row going on in the houses over back paying furloughed workers. Trump wants those workers to be back paid, but there's apparently some legalities where that can't happen, won't happen, don't want it to happen type thing. Farmers are up against it because there was apparently 12 to 13 billion in aid set aside before the shutdown to help farmers in offsetting some of the Trump tariffs that have gone on. That's now on hold, so those farmers might not be getting that money. And air traffic controllers have decided that they would rather call in sick than work without pay. which saw around 2,500 flights cancelled yesterday on the back of that. So these are all the little effects that you can see that happens from a shutdown, which could then impact the economy later on. So we all talk about experience. Some of you guys weren't around for the last shutdown and trading. This is the sort of stuff that you need to be looking for. These are the effects that spill over that then create weaker economy later on. And the question will be, we know that there will be weakness, but it's whether the US can bounce back from that weakness. And lastly, on to the Russia-Ukraine thing. That's been a bit quiet of late in terms of headlines from either side. But a Russian senior lawmaker says that their response to a possible supply of Tomahawk missiles to Ukraine will be harsh and asymmetrical, according to RIA. And a couple of weeks ago, I mentioned that options market were trading, getting more bearish over what's happening in the UK, increasing options bets, particularly in euro sterling. A headline just out before the show started showing that pound bearish bets are at the highest since March. So we've had a lot of pricing being done on that. And that's it from the headlines. Anything else, Kay?
No, just a bit of a worrying line when you talk about that Ukraine, Russia. Well, I think there's two of them, and there's this Belgian company who is making weapons and shells and stuff for the Europeans to buy, basically, I guess with that NATO money, etc. And they are seeing more and more drones flying over there, in between brackets, secret plants where they are building or where they are manufacturing those shells and rockets, etc. So I think that Russia-Ukraine story, and you just mentioned the Russian reply. It's by no means over yet, so that's another one to keep an eye on. But no, for the rest, I guess we've covered everything. Those central bankers really, they don't know what to say anymore right now, right? They're all data dependent. Most of them are in a good place, so I think whichever side of the Atlantic are those people are talking, I think it's all a bit of a loose comments right now, because they are just paid to make those comments.
Yeah, and paid well to make those crappy comments.
Yeah,
Well, so yeah, I mean, this drone stuff. I don't know why we haven't got like weapons that you can just point and take down a drone. I'm not talking like big things, like a little rifle type thing that shoots a electronic beam that knocks out a drone.
because in Europe we have spent the last 30 or 40 years building up the military, etc. And budgets have been cut for decades now, and it's and it's a big issue. I mean, it's been said, and okay, some people may say that Europe wants to get into war, but I think they just don't have the power to go into it. We're a bit helpless in Europe. I don't know specifically the UK, but with the planes, etc., they are pretty pointy at the pointy end of evolution. But in Europe, I think it's a real catastrophe on the military side.
Yeah, I'll tell you what. You give kids a few catapults, they'll soon sort them drones out.
Yeah.
The cheap option as well. And Zhao, oh, you worked in that field. Yeah, it does cost money, obviously. But if these things are increasing, I mean, you don't need thousands of people walking around with jamming guns. Stick a couple here and there, and go and have some pot shots. Anyway, we'll leave that there. Right, let's get back to it. Dollar yen. Talked about it's just knocking on the 153 door. We got to a high. It's touched 153 according to Bloomberg. So we've hit the big figure. Very, 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 very strong. Not just here, but pretty much across the board in yen pairs, as you might expect. So similar stories everywhere. We are getting into, as we said, the territory where the MOF will be getting a little bit worried. Wide view on all this. The big levels, we're crunching through some of them. This 152 is a bit of a monster. Goes back a couple of years, but it goes back even further to some of the 80s, 90s, that sort of area. Same with the 155. We had a lot of action around here on the way up. It was resistance, it was support, on and off, on and off. And then it was a big resistance point after we had this break here. So that's the next real big level on the nice clean picture. I might as well take this fib off now because it's busted to bugger. So that's an area we need to be looking at. If we're getting there really quickly, then yeah, you've got to be careful about intervention, but don't gamble on it. I don't want to see people going, oh, I'm going to start shorting because of intervention, because as we saw in these moments, it can go a long, long way before they decide to step in and intervene. People were trying to guess intervention from the 150s in this move up here, and even in this one up here. And they're not going to give you a free lunch. So, if you want to guess the intervention, you need to look for the signs. But even then, it's not really a strategy trying to catch that because it could come in time and you might miss it. But anyway, we've got some big levels coming up. Not that the tech is doing anything at the moment. So be very careful with this. Where do you think this can go, Kay? I mean, really, can we go all the way to 155 just on the back of Japanese politics?
If the US wants to push a bit, and as you rightfully said, the dollar is also a pretty bit elsewhere for one or the other reason, apart from the metals, obviously. But we could print 155 today if nobody says or does anything during the US time zone. Who is going to stand in front of it? I mean, the best thing you can do if some people are riding this move is to take partial profits and ramp your stops higher, your trading stops higher, just not to give it all back in case they would somewhere intervene. But in a natural way, I don't see it go. What? I don't see it go down. I mean, that's the thing. And it's not only it's a yen thing, so it's not only a dollar thing. Look at the yen crosses, right? I mean, euro yen with all its problems. I mean, Germany not getting off the ground. France is we don't even know where Macron is today. And still we are trading at all at the latest highs and above there. Yen crosses are beat like hell as well. So I mean, who's going to stand in front of it? Yeah, get a bit of take profit. It may not go one way, but there is an interesting zone if you look at it from with the eyes of like maybe another thing. There is a bit of a triangle in the longer term going on, starting 2023, then into 2024, and that comes in at around 154.5. But it's just, as I said, in metals as well, it's just a line on a picture, right? It's not something. It's not the chart that directs the flows, right? They only do if we are in ranges. Okay, we are in big ranges, but we've had some real events here. So yeah, I think we would already be happy if it goes back to 150, 190, 152, the figure, if in current context. Imagine that the dollar loses some steam. Where can dollar yen go? I mean, yeah, maybe 100, maybe 200 points lower, but then I think you will find buyers again. It's just one of those things that unless Takaichi comes out now saying that one line that could surprise the markets is saying she comes out and says like, "Oh, the Bank of Japan is independent." Stop. Don't say anything more. If she says that the Bank of Japan is independent, yeah, then dollar yen is probably going to lose 150, 200 pips. But in current context, why do you stand in front of this? As I said, you can take profits or partial profits. That is so because it's been a big move and there is a bit of an intervention risk. But I was just looking at the options, by the way. If you want to protect against an intervention, there's an interesting one because 151.5 only cost 30 pips, which is 0.2%, which is not a lot for a 1 week protection. If people are longer term dollar yen, that's a cheap-ish protection if you want versus if you're afraid of interventions. But right now, I think is the only thing that could potentially stop it.
Yeah, but if we break 153, you'd be able to pay that for a 152 put.
Yeah,
You know
yeah.
what I mean?
I
So
mean,
yeah, it's
but that is starting to be interesting if you have the position to buy some protections for those who can do options, of course, because not everybody
yeah,
is able to do options. But that's starting to be an interesting protection, I would say. Um, and you don't give away too much, as I said. 30 pips is not too much in the end.
yeah, exactly. It's better than being on the wrong side of intervention and getting it for 100 pips, 150 pips.
Yeah, and you never know where the gap will be. Yeah, if
Yeah,
you see a bit of if they check the rates 100 pips down, you get stopped out. Then it rallies back up because they didn't intervene. But
yeah.
if you can do a bit of protection, you're out of all that noise as well.
Yeah, and yeah, it's a fair point. We say it often. You know, if you can trade options, look at the options. It's your probably your low risk way of trying to trade it. But you just gonna your timing's going to be everything in something like that, as it is in most trading. So what's going on with the dollar? Because the dollar seems to be finding some strength,
Mm,
and I'm a bit nonplussed. Why? You know, is it risk? Is it just following gold? You know what? You know, the US is shut down. Is it because we're not getting any shit out of them?
yeah,
You
I
know,
Yeah, I've got the impression euro is dragging a lot around, and then we have like and again gold and silver are again pushing higher. There's this thing about we can't buy anything else. And maybe the market was already selling a bit of dollars into month end and quarter end and thinking about the shutdown, now being forced out of positions because of this thing going on in Europe. So euro dollar is dragging stuff down. Dollar yen is the yen is doing the heavy lifting. There seems to be a lot of heavy lifting from the other side of the dollar pair as well, selectively. Because if you look at, for instance, and that may come as a bit of a surprise. Sterling, if you look at the cable, we're a mere 50 pips away from where we were at month end, right? It hasn't really done much over the course of the start of this month. Yeah, Aussie is a bit lower, but that's also not really falling out of bed right
yeah,
yet. But that had like a big rally in, well, big, sizable rally, let's put it that way, in the context of ranges into month end. That's been giving back a little bit, but Kiwi is weaker because of the RBNZ. Dollar CAD, yeah, the Canadian dollar has been weakening, but it's all still a bit selective, right? Because if I look at other currency pairs, and I've been looking at some in particular, like for instance, like dollar Norway has trouble to stay above 10 right now. So I think actually there is a fair chance that the dollar is going to at least stabilize or maybe give back some. I'm going to be honest. I just bought a small Aussie here, and just in case, shut down, etc. Market waking up saying, "Oh well, it's not. It's all dragging on much longer. Maybe then the dollar is going to give back some of it. But again, it's going to be all selectively. I mean, not all dollar pairs are equal.
no, absolutely. And I wonder, you know, given how the yen crosses are holding up and powering on, whether the pairs like Eurodon and Cable would be a lot worse off if it wasn't for that yen influence. Would we be seeing euro dollar, knocking towards 115 if it didn't have euro yen keeping it afloat? It feels like it's got an arm around its neck to stop it from drowning.
Yeah, for the euro, maybe. For the sterling, it's different because the sterling is actually better bid on crosses than what may have been expected. Sterling is a different animal, in my opinion, and that's why I'm saying we need to look at all the all the currencies actually separately.
Yeah,
And yeah, I think sterling will get. I mean, probably will start to weaken again the closer we get to the budget, but maybe just the market judged, and as you said, they're already short sterling via options, or at least paid money to be short sterling. So maybe they want to do it via options and not really have too much cash in the books on the sterling side. But yeah, it's all for oneself in the currency market. That's what I'm thinking about all of these as well. I was just keeping an eye on. Oh yeah, dollar mix is 1840. That's a bit in the middle of nowhere.
yeah, that's going nowhere at the moment. Still stuck in that range.
Yeah,
Yeah, I don't know if this is the USMCA stuff because it's looking a bit similar to dollar CAD.
yeah,
We were just, that thing is really tight. I don't like this. This is too tight a
yeah.
range to sit for long. Something's going to happen here. Either we're going to, see a downsized move, may take it through 139, or we just see a bit of a extension to the edge of the range between
Yeah,
there and this level up here. But
but
yeah, two,
in a way, the Trump administration is keeping it there because Trump
yeah,
doesn't want to close the door on a resolution of the Canadian thing or USMCA. So there's enough. He's keeping everybody on their toes, but doesn't give a clear direction either, right? If he says, "Oh, well, we're not happy about Canada, we need to renegotiate everything," I mean, then you're talking about maybe 143, 144 again on the dollar CAD. But if he says we can find a solution, then Canadian dollar, because I do think that the market is running a bit short Canadian dollar because of all this uncertainty. Canadian numbers have not been great either. But if he opens the door to a solution with Canada, which is not going to bury Canada completely, there will be equally quite a bit of room for the Canadian dollar to recover.
yeah, yeah, very much so. I'll
Yeah.
keep that
So
in. I'll keep that in mind for me. Little longs I've still got on. I'd love to see a move up to 140 before that happens, but who knows? Wants and wishes are not
there is,
for the
yeah.
market to
Oh,
provide.
yeah. You've got it there. Your white line just above 140. Yeah,
Yeah,
that's an
that's the
interesting one. That's an
yeah,
interesting.
that's the 38.2 of the year's move.
That's an interesting one.
Yeah, right, pretty much bang on that 140. So it's going
And
to
it's
be a
the
big old
prior
one.
high.
Yep,
It's
yep,
the May high as well. So
yep.
that's an interesting level for those who
And
are watching
support back
Canadian
there in
dollars.
December as well when we had a break above
Yeah,
it. So yeah, it's going to be a big
very
old
interesting.
area up there, most definitely.
Very interesting.
Love to see that get taken out. I've took my eye off the ball maybe for this one. Let's get rid of that fib for a moment. But we got up to in Aussie Kiwi a big old level up here. It's a fib. Let's go in now of this whole huge move. Going back to 2010, this fib pattern. This has been a prior high area up here. I was looking at around that 114.50. We got to 44 and had a bit of a sell off after that. So probably missed that boat. So I'm going to leave that alone. But yeah, we're up at some really interesting levels up here. I don't think I'm going to touch it at the moment with the RBNZ the way they are going crazy. But yeah, I've already been burnt on trying shorts in this one, and I'm a little cautious in getting back in. But we've had one half test up there, and it's given a good rejection so far. So maybe this will hold in the range. Maybe I'll trade it later. Who knows? Right, I'm going to pass it over, mate.
Yeah, cheers, man. The problem now as well is that you have a real differential in interest rate with between
Yeah,
Australia and New Zealand as well, which is making it hard to justify on the fundamentals a short Aussie Kiwi. Yeah.
yeah,
But yeah, I mean, levels are levels. Yeah, just look at our traditional stuff here on the metals. That was just a line on a picture. That was just a line on a picture, and it's just going up. It's really still in the mode of if I can't buy anything else, I need to do this. And And it's been fueled as well. Yesterday or the day before, Goldman Sachs came out saying that they think gold is going to go close to 5,000. Morgan Stanley came out saying that, oh, in the portfolios, we should now build up to 20% of gold holdings, which I find, if you look at global portfolios, that is really, I would say, nearly a disaster scenario if you need to have as much gold. So, but anyway, the market takes it for the Bible and just continue to buy gold. Now, um, I'm not standing in front of this, but this starts. I mean, a plus in less than 2 months, we just added over 20% in gold. Okay, this is more than okay. In April we had that. We knew what was going to happen after Trump's inauguration as well. That's what I said. I thought at the beginning of the year gold was going to be the if not one of, if not the trade of the year. It is still ongoing. Just be careful about the speed, okay? Nothing telling us that it's going to come back. Actually, just over the time of the flow show, they added another $10 to it. Next one is just 41.13 here. Then we are looking at quite higher levels. I got nothing more before 44. I just want to start to say, okay, the speed of things is starting to not worry me because we nothing should worry us, but it's starting to be a bit fast and relentless, and I'm thinking like if that is on the back of those calls that banks are sending out, um, we may see one of these coming up. Perhaps relatively soon, and just the demand drop away, and a bit of a move lower. Now, for a correction to start, still nothing telling us that a real correction is starting. I think we are going to have to get below 38.80, 39, the figure, and this one will be up there. This trend line will be up there by then as well. This is only if we would get a dry up of the demand, like we've seen a couple of times in silver as well. Um, just watch where we close the day, and it's always going to be important where we close days. Okay, if we start to close below 38.80, 3900, then perhaps we could see the start of the beginning of a correction. The everybody's long, or this is overbought or whatever, that does not work. It hasn't worked for quite a while. As you can see, I don't even have RSI on there, and I never wonder whether everybody is long, but the speed of things is starting to worry me just a little bit. Okay, silver, one of those. Once more, here, here, here. Demand is drying up. 1, 2 couldn't get above there, and all of a sudden we went back. But where did we go back to? Just to the really support line of this trend, a little channel that has been forming again. So for the time being, nothing changes either, but it is slowing down versus gold, as we have seen. Okay, yesterday also on Face, Dale showed us the gold silver ratio. It is slowing down a bit compared to gold. We have not yet broken above that famous 2011 high. If it goes there, we may see another ramp higher. For the time being, I'm going to be a bit cautious with it. If you're looking for technical levels, the next extension comes in around 50.5. It could be one of those where you see the prior high there, 2011 high, taken out, do a little bit of a up, and then start to correct a bit. But again, if you're looking for real corrective activity, that should not start before we break down below 47. Okay, the trend line will come in a bit higher, around 47.5 or so, but really 47 is your first is your first line here, where it could start to come back down, because you have those spikes higher, the low here, and then we pushed on 47, 47 and a quarter. For as long as we're above there, don't even think about deeper corrections, okay? And yeah, the one last thing I wanted to show is that cable, because it is resilient thanks to these sterling crosses. This is one that if the dollar perhaps starts to turn around a little bit, since we are holding above this 133.65, 133.90. We tried it yesterday, interestingly, but we are holding just above that 134, the figure for now. This could be one that perhaps sees a bit of a recovery there. On the tip of my toes, because we have not seen this dollar starting to give back much. Okay, but it's one. If you look at the crosses, the relative strength between the currencies, this cable is maybe one, if you want to per se trade short dollars right now. Maybe you'll find levels here that could be protective and put your stop below there. This just saying, because it's holding pretty well. And with that, Ryan, back over to you, mate.
Thank you very much, mate. Yeah, we were talking about shooting down drones. It's a headline I've just seen on Live Squawk. A German minister said that German police are going to get the power to shoot down drones. So yeah, they're getting their catapults out instead. But anyway, yeah, let's go out. Let's go and do a bit of drone shooting this weekend. If you see anywhere, yeah, I don't know.
All right.
I'm not inciting you to violence, boys and girls. So out that. Right. Before I get myself into even more trouble, I'll get the editors to cut that bit out before I put it on YouTube.
Yeah. Edit it.
Yeah, yes. Right, yeah, guys. Yeah, have a good day, everybody. Stay safe. Yes, I'm still long. I'm still long euro sterling. Yeah. Anyway, have a good day, everybody. See you later.